Today we're going to be talking about the top swing stocks for July 2019. Now the stocks on this list are ones that have a high likelihood of providing the price action that we need to trade off of this month. But do not buy into these stocks without a plan. I say this all the time, but buying and randomly holding stocks is not a strategy, it's just stupidity. Think of the stock market as a chubby schoolyard bully. Much like the bully, the market is stronger and more powerful than you are. Thus, you're going to need to be cunning and plan ahead if you're going to win. Anyways, the first way to avoid getting tossed around by the stock market is to toss that ravishing like button. And also subscribe for more short, sweet, and simplified videos on how to trade the stock market. Okay, quick plug, if you'd like to trade the stocks on this list commission free, my suggestion is to check out Webull. They have gotten pretty positive feedback from most of our viewers who have tried them, and of course they still have that free stock promotion, which you could take advantage of by clicking the link below. Excellent broker. Okay, now the first stock is MRK, which has an FDA approval date on July 16th. Now MRK has been collecting FDA approvals like a wolf collects sheep, but we'll get back to that in a second because I want to start with the technicals. Now, while I'm not a huge advocate for swing trading news catalyst plays, especially of the biotech variety, this setup I'd say warrants the recommendation. If we are talking strictly technicals, MRK has a long-term upward trend and a pattern of pushing back for periods among the uptrend. Now this setup with the pushback the last couple weeks is quite beautiful in its own right. In fact, each time we made it this far below fair value, we ended up seeing a nice recovery subsequently afterwards. So as we get close to testing if it can hold direction over our directional SMA line, we gotta ask ourselves if this is going to be another discounted position. And while there isn't a concrete way to say if this is going to continue its trend of selling off and then increasing afterwards, we can look at this objectively and say that if we can hold our directional strength over our red directional SMA line, that would be a confirmation and a strong elevating factor that we will continue the pattern. And if we break directional strength, we do have a previous history of failed breakdowns. But this is where the fundamentals come in. You see, MRK isn't the usual small, sketchy biotech play that we like to talk about. This is a well-established company with a history of winners. In fact, MRK's big winner, Keytruda, is expected to be the top-selling drug in the world, and revenue continues to be predicted to smash expectations even without FDA approval of this new drug. So, why is it that we care about this new FDA approval then? Well, FDA approvals are a time where the spotlight is put onto companies, and a solid company like this one with a history of price action discounts is likely to benefit from the spotlight and more volume. But moreover, an FDA approval can cause an acceleration to help boost our already discounted position. And an FDA disapproval can discount this already valuable company even more, perhaps below our directional strength. So what does this mean? Well, the average monkey / analyst rating, the stock has an upside towards 91.75, and with us nearing oversold, I'd say that this can be a very fruitful swing trade if given the right confirmation. Always wait for confirmation, folks. By the way, I get quite a few comments from folks who are like, why do you spend so much time talking about analysts or the fundamentals behind positions? Charlie, you sound like a barking dog. Woof, woof, woof. But the reason that I spend so much time talking about the fundamentals and talking about news catalyst plays and stuff of that nature is because these events drive investors in, and that creates fluctuations that we can then trade off of. So yes, it is relevant, and I'm not just a barking dog. And in terms of analyst predictions, they're valuable in the sense that they provide guidance to see where investors, and more importantly, the institutional money, the big players in the market, it gives us a look at where they think the value is. Alright, now AMD has been a long-term swing trading favorite of mine because it has a pattern of overbuying and then returning to fair value. And perhaps most importantly, it has a consistent uptrending pattern. Now, I'd say a consistent uptrending pattern is one of the biggest elevating factors pushing the odds of success in your favor. It's one of my favorite ones to talk about on the channel when it comes to swing trading and day trading, really. But the interesting thing about AMD is while we just failed a new breakout, we are testing the region where we have long-term resistance. You see this original run-up broke about a penny past year-long resistance, but couldn't hold it and sold off, which made sense as we were overbought on the RSI. But now we are adjusting to a higher price average, and if we do see it break and hold this long-term resistance level, that could draw in new investors as higher highs longer term tend to create excitement amongst the masses. But I will say that AMD is largely impacted by the direction of the market, and a sell-off this week could provide a discounted position. But why is it that I recommend waiting for higher highs and not simply buy in before higher highs? Well, because this is a hypothesis. We need to see a technical confirmation of my prediction. That means buying into price strength after higher highs. If we buy in before this, then we could simply be left holding the bag if the stock gets discounted. But if we buy in after this, we can buy in during a period of price strength, and if it turns against us, we have a larger likelihood of breaking even, or at least turning a bit of profit. And at this current entry point, we have too much downward potential to support. We know that once we break previous resistance, this will no longer be an issue as old resistance becomes new support. Okay, great. Now switching over to gold, we've got JNUG. This is our favorite gold ETF, and as Robert Frost once said, nothing gold can stay. And while I don't bother reading poetry, the Robert Frost quote might be right nonetheless. Now, I've always encouraged folks to trade ETFs that they are familiar with. The reason is because it's a lot easier to trade off of price action when you know how that stock or ETF trades. If you're trading a completely different set of price action, you're not going to see the patterns in quite the same way. When it comes to ETFs that you are familiar with, you already have in the back of your mind previous support and resistance, a stock's reactivity and behavior to overbuying and overselling, and so on and so forth. So that is one of the reasons that you see a lot of consistent long-term traders focus on one or two ETF pairs. It's very easy to be consistent with those, but it can get a little bit monotonous. But anyways, JNUG has been running up, which is generally a sign of more uncertainty in the overall market. As the market uncertainty goes up, people are like, oh, let's go into gold and other types of minerals that have historically performed well under bad market conditions. The question is whether or not uncertainty will wane this week, but in terms of JNUG, I really do think it's a bit more on the overextended side. The last two times we tested highs, we immediately broke down. So if we do see another rejection of highs, we could flip the switch and trade JDST's upside. As a reminder, when JNUG goes down, JDST goes up and allows us to profit off the downside of gold. And while gold may continue to upsell, I wouldn't make a case for it because of the amount of downward potential that it has. It's all about taking calculated risks and having technical confirmations. My suggestion is to make sure to get a fair deal and make sure to buy into a period of confirmation. Okay, so those are my 3 top swing trading picks for this week and the end of July. But I do want to give you one more because I do like to reward folks who stay towards the end of the videos. I call you guys the active, more engaged learners. So in terms of positions that I've been watching and certain things that I see value in, I do want to show you CEI. So CEI has a pretty beautiful pattern of running up on the 5-minute chart. We have confirmations. We have beautiful confirmations that allow us to simply ride up, buy in a confirmation, sell out at validation. And we love that because when we're buying in upon price strength at a confirmation point, we could simply measure the strength of the position over the SMA line and write the price action up until we have price weakness and then sell out at validation. And you can use multiple validation points, but for these purposes, I have been using the SMA line just to cross over the SMA line as a validation point. And this sort of beats in the idea of importance of how you need to have a concrete entry point and you need to have a concrete exit point and you need to act on that 100% of the time. If you don't act on it even once, all of a sudden all of your future trades, or you don't act on those either, and then you just start going in this downward spiral and it's really an ugly situation. Now, one of the things that I will say with CEI is that buying in upon both price strength over our short-term blue SMA line, as well as directional strength over our red long-term SMA line, those are 2 really big elevating factors for us. And you can see that if you had followed that rule, the last 2 major spikes, you would have made a decent profit. And simply just buying in upon that directional and intraday price strength, those 2 would have been great elevating factors for you to ride the price action up and sell out at validation. And even if you don't catch the first confirmation, there's tons of different periods of price strength that you could simply hold and make a profit on. But buy into price strength and buy into directional strength. Those are 2 huge elevating factors, especially if you're a beginner. Now, our favorite ETF pair, LabU and LabD, has had some movement. I love directional strength. LabU has pushed up over our directional SMA line, and when LabU pushes up, LabD pushes down. But what I've noticed is that we've had this sort of pattern of keeping price strength, not so much direction, but price strength intraday. For example, when LabU holds above our short-term blue SMA line, it tends to keep that strength for most of the day, and LabD vice versa. This is another elevating factor in our favor and allows us to boost the consistency, especially when we have inverse pairs. We love inverse pairs. Anyways, I hope this video was useful. If you have any questions, feel free to reach out to us on the ZipTrader Circle Facebook group or also comment below. And of course, if you're having a hard time following all the opportunities in the market, we also have the ZipTrader Circle Facebook group. We have the ZipTrader Discord group, and we have a trading tutorials playlist. And the wonderful thing about the Discord group is that you can simply just join and then pick which chat and category that you want to engage with. If you're into just swing trading, there's a whole section just for you. If you're into crypto, there's a whole section for you. Whatever you'd like to do, whatever sector that you want to focus on, there's an option for you on the ZipTrader Discord group. And if you need any further help, we do have trading tutorials All you need to do is go to the ZipTrader main page, scroll down to trading tutorials, and then waha, here you go. And I tried to set it up in a way that you could start from the bottom and then work your way up. And then you could just consistently do that as if you were taking a course. Anyways, folks, have a great day, and I'll see you in the next video.